Hello and welcome to the 1895 podcast. I'm Thomas D.
I'm Rob Cockerell and we're here live in Rotterdam at our European CO2 Summit 2026. Day one of the event is coming to a close and we've had so many fantastic talking points throughout the day that we'll have to cover in a future podcast episode, Tom.
Yeah, we absolutely will, so make sure to listen out for that. Today we've talked markets, we've talked biogenic CO2, capture, liquefaction, direct air capture, and so much more that I could go into. And not forgetting that this is also our second podcast of the event already. I know we're only 2 days in after opening up proceedings yesterday as that setup was going on all around us.
Absolutely, but right now we're here on the main stage for this recording to discuss all things finance, investment and future pricing, a topic that's come up a lot today already throughout our presentations and our Q&A sessions.
Yeah, and on the note of those Q&A sessions, since we are still live, I know those listening to this in post won't be able to, but for those in the room, that Q&A section on the app is still live, so if you've got a question for either of our speakers up here on stage, then please do continue to send those in and we'll try and get them answered.
We will indeed. And with that, I think that's enough from us, Tom. I think we should get into this podcast properly. Joining us is Chris Carson of Carbonic Solutions and Philipp Lukas of Future Biogas. Unfortunately, our third speaker, Adam Forsyth, was unable to make it in the last hour, so we're freewheeling a little bit without Adam here, so forgive us that. But perhaps we could just go down the line here and have a bit of an introduction and the experience you have in the industry. Chris, let's come to you first.
Yeah, so I've been in the CO2 industry for about 25 years now. Worked for a long time with BOC and the Linde Group and started my own business advising companies that have waste biogas streams of how they can monetize and get those streams to market. I'm now involved with manage a business out of the UK that has 2 sources and soon to be 3, and we're working on a new startup in the US market as well.
Fantastic, and over to you, Philipp.
Well, for every year of experience that Chris has, I have probably a month. I run a biogas business. We make biomethane as our main product, but it just so happens that the 50% of the gas that we brew in our tanks is carbon dioxide, and when we split off the methane to stick it in the grid, we end up with pure liquefied CO2 for which we are seeking markets. And much like Chris, I'm based in the UK at the moment. And so that's a market that preoccupies me. And we're looking to build lots of new capacity. So by the end of 28, we should have between 150 and 200,000 tons of CO2 available.
Great, and we're delighted to have both of you on here. A wealth of experience, I must say. As we said, to maybe paint a bit of a picture for those listening to this who aren't in the room, Day one is now coming to a close. We had all of that content this morning, so we've still got a whole day to go. But what have been both of your highlights of the event so far, or maybe your key takeaways? Chris, I'll come to you first. I saw you around earlier.
Yeah, I think we had a good morning this morning. It was really interesting to see the views and to look at the European picture. Pretty complex. A lot of talk about e-fuels. And markets that are kind of beyond the utilization, the traditional utilization market. And I guess one of the big takeaways for me is kind of an uneasiness around how we're going to balance the building of CO2 recovery capacity with the available markets and how that's going to go. And some days I wake up and think we're going to have an oversupply in some markets, and other days I wake up and think we're not going to have enough CO2 to serve the potential evolving markets out there. So a lot of uncertainty on how it's going to look in 3 years versus today.
Philipp, is that a sentiment you would echo?
Yeah, very much echo that. I think obviously in the UK in particular, we've had a volatile market since 2018. We've had 2 price events in that period and government intervention, et cetera, et cetera. But I think with the net zero agenda now front and center, sort of Chris alluded to all the different uses that CO2 might be put to, and we've heard a lot about those today. I think there is a real risk of volumes suddenly switching in large quantity in a way that this market simply hasn't been used to.
Sure, and Chris, if we If we zoom out and look at the market from a wide perspective, how would you describe the current state of the CO2 market in 2026 with a broad brush, of course?
Yeah, well, it's important, it's really important to realize that CO2 is a series of kind of local regional markets, right? So when you talk about Europe, you got to look at what are you talking about? Are you talking about Spain? Are you talking about the UK? Are you talking about Ireland? Because they all are different markets. Ireland is supplied differently than the UK, which is supplied differently than Spain. And, the Benelux and Germany are, you can wave product from one side of the market to the other when you have a shortage. That doesn't happen in the UK. That doesn't happen in Ireland. You got water there. It's harder to move product around. It's more costly. Spain and Portugal are out on the end a little bit. It takes a long time to move product over there if you don't have it locally. So I'm avoiding your question because there's not one answer to that question. But if I had to give a kind of a broad answer, I would say there is a little bit of uncertainty around how it's going to be in the short term. It has been very calm for the last year and a half, maybe 2 years, and that makes me nervous.
And uncertainty is very much the word of the day, isn't it? And we'll get into that later of those poll results, Rob, won't we?
We will. It does make me nervous as well. It feels like a false sense of security sometimes. Yeah. If we shake that up a little bit, I mean, Chris, we've talked together about bio-CO2 for, a decade? Certainly intensified in the last 7 to 8 years with some of those big supply crunches. What do you make of everything that we heard this morning related to biogas and to biogenic CO2?
Well, the message I got is, from the presentations, and I agree with, is that biogenic CO2 is here to stay, and it is one of the future big sources of CO2 for the future. I've been preaching that for many, many years. I put my career into this area, so I believe that to be true. There was a great question of what maturity level are we at on the biogenic CO2 market. I think that's a fantastic question to ponder on, to ask, because I think we got a long way to go until we are more mature, compared to the traditional supplies of CO2, which is, managed pretty much by the big suppliers out there that have many, many more years of experience than I do. The Nippons and the Lindes and the Air Liquides and the Air Products of the world. So the message I'm getting, that I agree with fully, is that biogenic CO2 is here. It's got a role to play, and it could be a very big role going forward.
Fantastic. And this is, of course, intended to be a panel discussion around financing, investment, climates, etc. A question we couldn't really get into fully this morning from one of our sessions was around the pricing premiums. And do you see a price premium for merchant CO2 customers and what they're willing to pay for biogenic CO2?
Not really, no. There's starting to be a lot more talk about it. In the CO2 world is it's slow to move because you have contracts with your end users. So a lot of the customers we're serving today out of biocarbonics in the UK is, contracts that may be 5-year contracts, and we're in the 4th year. So, when we signed a contract 4 years ago, that was a different world than we're in today. What I do see is a shift towards people wanting to know more about biogenic CO2, asking the question, is it biogenic? What are the sources? What are the feedstock sources? So it's becoming more and more a topic of interest. It's not demanding a premium, but where it will demand a premium is in the applications that we talked about, this morning. When you're talking about e-fuels, absolutely biogenic CO2 should command a premium depending on feedstocks and all of the intricacies that we learned about this morning. Also with sequestration, right? It's much more desirable, and it brings more value when you talk about sequestration. So I think it is part of the maturity of biogenic CO2 to where it should be able to command a significant premium depending on where it's being used, and it'll be drawn to those applications.
And for our listeners' benefit, when this episode goes out, Philipp, you were shaking your head then as well.
No, I totally agree. I mean, what we see at the moment is biogenic CO2 from combustion going into sequestration in the main on big-scale projects, whereas anaerobic digestion CO2, the problem is the fragmented market. The problem is the fact that we're still in Europe building subscale biomethane plants all over the place because that's the way the subsidy regimes are set up. And then aggregating that together is complicated and expensive. And that will iron itself out. Some of the subsidy regimes are now, and some of the support mechanisms are now encouraging larger scale plants. But if you're sort of looking to collect 1,000, 2,000 tons a site or something, that's just, that is too complicated. What we see in the UK is the new target size for subsidy would leave you with about 8,000 tons of CO2. That's more sensible from a logistics point of view. But again, it then comes back to, where are you? And again, it comes back to the national markets point, right? If you're going to build biomethane plants in the middle of Spain somewhere, you probably won't struggle to find buyers because it's difficult to get CO2 to Spain. Similarly, Ireland. Whereas in other continental European markets might be a different story.
I'd now like to get into another question that we didn't quite have time to get into during one of the Q&A sessions earlier. And it's a bit of a two-part question, partly surrounding DAC, which we'll be able to address tomorrow on the panel session. But for you, Philipp, what are the biggest concerns, but also opportunities from an investment point of view when it comes to biogenic CO2 sources?
Well, the biggest concern is, if you like, is making the wrong decision in terms of where it goes. We are a bit late to the party in comparison to some of our competitors in the market because we had investors who fought shy of the CO2 market initially, heavily commoditized market in the UK. Pre-2018, prices were boring as hell. We're now catching up, retrofitting, building our new plants for CO2 capture. I think what you'll see is the UK market is a weird one anyway because we've had lots of false dawns with projects. There was a huge amount of interest in SAF production, and ultimately there will be a big premium for bio CO2 into SAF production because some of the mandates demand it. But where is the SAF going to be made? The problem we had in the United Kingdom was that our power is too expensive. So, if you're going to make SAF and you're going to make it from carbon dioxide and hydrogen, you also need to find the hydrogen. And if you're paying 20 pence a kilowatt hour, or even just north of 10 pence a kilowatt hour, it's too expensive, and therefore the CO2 demand goes away again. As the market develops, I'm sure it will become more liquid, pardon the pun. More will travel, more terminals will be built, more CO2 will go to wherever electric is cheap, and therefore we make SAF because the mandates for SAF are in place. Biogenic CO2 from anaerobic digestion will always be cheap because it is ultimately a byproduct. It's just a question of buying the electricity to liquefy it on site and then the haulage, depending on how far you are from a user.
And Chris, I can see you agreeing with Philipp there.
Yeah, absolutely. I think that's absolutely the picture, and I'd kind of add to it from the investment side. What I see going on is, you've got investors funding these biodigester, these biomethane projects, and they're looking closely at the value of that CO2 ongoing, as is the operator looking at the value of that CO2 ongoing. You've got this e-fuels world standing up saying, hey, we're going to, we got this going on. We need CO2. We need green hydrogen. The reality is that that's way, way out in my business horizon. I can't sign up a site. I can't commit to a site to take CO2 from it if I got an off-taker that might be 3 months away or 3 years away, because I got to move that CO2 somewhere else. So, what's going on is that there's this question around what is the value of that CO2? Will it be bigger when we get e-fuels and we have, biogenic premium? Or will it remain where it is today? Well, they don't want to commit that CO2 to today's market at today's pricing. So there's a lot of kind of holding on and a lot of cautiousness around, Philipp, you talked about a false start where, you go out in the market and you don't put CO2 capture on in the beginning because you don't really know what the value is and what it's going to be and how you're going to get it to market. And, if you kind of work in the world, you realize that, everybody, just like all of us in the room, the biomethane guys have their plate full just running their biomethane and their digesters, right? And then they got to learn the CO2 market. And so it's really hard to figure out how to get that CO2 to market and what the value is going to be. And so therefore that kind of stunts the ability to invest flat out. That's actually gotten better. Yeah,
it has gotten better, but I mean, we started out on building unsubsidized biomethane plants in 2019-20. a business model which has that's thus far yielded one plant, but nonetheless. And we thought at the time that sequestration and the voluntary market would hoover up loads of CO2, because back in 18, 19, 20, that was a big story, right? But as I'm sure this has been discussed here and will be discussed again, 80% of that market is still one company. And it's not grown. And it's not grown because people have left behind the really cheap removals or avoidance credits that are discredited. But they haven't jumped straight to BECCS or DACs up there somewhere in price terms. They've gone for all of the intermediary stuff that's come along in the meantime. Enhanced weathering, biochar, all sorts of other technologies that have picked up that voluntary market and have created lots of volume there, but that hasn't gone to BECCS or DACs.
I can see lots of audience questions coming in, which is fantastic. But before we get to that, you have just opened up a perfect pathway for me there to talk about bankable projects. Chris, I know this isn't necessarily your expertise, but you do have operational boots on the ground and that deep experience. So if we benchmark, what does a bankable merchant CO2 project look like today? Does it rely on long-term offtake or can spot markets work? And equally, what does a bankable biogenic CO2 project look like today?
Yeah, so it's tricky because a bankable project. So you've got investors out there that are investing in biomethane, right? The biomethane offtake is a grid connection, and the grid can take your product when you have it, and if you don't have it, it gets along without it, right? So it's really easy. It's 1 point, one off-taker. You kind of do that in the beginning, and your contract's done. I'm probably simplifying that.
No, that's pretty accurate.
But when you talk about CO2, we've got 2 plants in the UK, and we have 27 contracts. So it takes 27 customers to take all of the product that we produce from those plants. That's a complex portfolio to manage. So when you look at a bankable from the very beginning of a project, when you have a financer that wants to invest in upgrading equipment, upgrading equipment, and then a CO2 plant, they want to see those contracts. Well, show me your offtake, and we'll fund that CO2 plant. That's not how it works in the industry. It doesn't work that way because that AD, the chance that they're going to hit their COD date when they say it's going to be is null, right? It's null. So if I sign up a bunch of customers and I tell them I'm going to have CO2 at this date to your site, and they get rid of their old suppliers and they're waiting for me on, say, June 1st, and the AD project is 6 months delayed, I've got to find a way to fill up that hole for 6 months. I've got to buy from third parties at high prices. So there's a lot of risk out there. Trying to make projects bankable from the investor standpoint, and the investors don't understand. They think it should be just like biomethane. So it's a really tricky place, and when it does become bankable is when companies like Biocarbonics or like Nippon or whoever it may be out there, Progases, right? Whoever it may be out there will go and sign an offtake contract, which includes usually take or pays. And will kind of guarantee an offtake, and then it feels a lot more comfortable. But then they start looking at, how big are you, right? And what's your credit history, and how much, can you honor that take or pay if it takes a year? And unless you're a Nippon or an Air Liquide or Linde, that's kind of hard to prove. So it's. You probably know this. I'd like to hear your comments on it, but that's kind of how I experience it from the outside. What they're looking for is usually not what we're willing to offer.
There's a reason why project finance isn't common in anaerobic digestion, right? One, they're all too small, and two, it's a cottage industry with a whole load of individuals. There's very few big companies in this space. There are no Nippons or Lindes or Air Liquides in the biogas, biomethane space. The biggest producers are in the sort of 0.5 to 1 terawatt hour space, maybe a tiny bit larger in the occasional European country. But, most people have a handful of plants. If that, a lot of plants are single units, right? So when Chris is trying to contract with them, he's talking to one individual who has one plant whom he has to rely on to deliver that CO2. And yeah, totally right. I mean, you don't have cast iron guarantees it's going to turn up on the 1st of July.
And just to jump in here and to build on that conversation, when it comes to incentivization behind projects, what sort of a role do carbon removal credits play when it comes to unlocking that financing?
For us, from our perspective, and we're different, I think, in how we look at this, but from my perspective, nothing right now, because they're not firm enough. The value is not understood. The pathway to get there is not well understood. It's very risky. So from a conservative small business perspective, nothing. Yeah, right now. And as that develops, it might change. I hope it changes.
We've looked at that market. We've talked to the players. They're very selective about what they want to buy. But ultimately, you have a market in which there are two major buyers, right? One of them makes windows, and the other one is called Frontier, and that's it. And then there's the rest of the world, and there's lots of transactions around the margins happening for a couple of hundred tons here, a couple of thousand tons there, and good luck to anybody who does that. And finding a sequestration facility is the first thing you need to do for that. But in the same way as in the sort of commoditized market, nobody's really paying a premium for biogenic yet, because why would you? That might come with SAF and with other stuff. In the same way, you've got the CDR market just hasn't. That's part of the CDR market hasn't grown as people thought 5 years ago.
And I think just to add on to that, what Philipp said about that, route to sequestration. There's a big cost in there, right? How much is it going to cost to get from my tanks underground, right? And if you don't know that cost, you can't evaluate your economics, right? You're taking a risk. So that's the other piece that's really uncertain that's got to develop. And it will develop. It seems to get traction. But I always tell the story, and I've probably told it at gasworld conference before. I was working on a sequestration project in the UK in 2004 that's still on the table today. And it's still on paper. Right? It hasn't moved, and I think it had a €100 million subsidy from the European Union back then. So, those are the challenges.
I have heard that story before. Great for the update.
Sorry guys, same stories.
It's good to know. It's good to have these kind of stories, because we talk a lot about these topics. It comes up in Q&A, but often we don't get that actual experience on the ground, as we said.
Yeah, I mean, we have in Europe now 2 sequestration facilities operating, Northern Lights and Greensand, and 2 definitely in construction. Timeline, probably 28, 29, and then a few more. I don't know whether Porthos has started building yet, and I've lost track of others, but that's it, right? But you look around the UK coast, and there are a dozen other people wanting to build sequestration facilities from small to large. With ideas for offshore gas fields and all sorts of other things that they want to recondition. How much of that's going to come off and in what timeline? I mean, what I can say is I'm pretty sure the UK government is tapped out as far as spending on sequestration is concerned. We've now committed to spending whatever it is, 22 billion on it. That's about the sum total of what we've got available. I can't see there being loads more money thrown at it. I may be wrong.
And the other thing on that, too, is, we learned last year at this conference, we heard a lot about Porthos and what's going on in Rotterdam, but there is no ability right now to get from truck into sequestration in the Netherlands. That's not even planned into the next 2 or 3 phases of sequestration, right? So if you can't get it into a rail car or you can't put it into a pipeline, you can't get there. So that's, again, it's that pathway to the underground, right? It's just not developing, and even the governments, which are spending our taxpayer money to develop these projects, aren't giving us, as people that have truckloads of liquid CO2, an option to get in there. It's all the big guys.
Mm-hmm. Yeah. You see that in the network code in the United Kingdom. The network code was written when the government thought there would be 5 or 6 people delivering into HyNet and 2 or 3 people delivering into Endurance, and it's all tied around that sort of legal structure. And now that we have a massive gap, we're building 5 million tons of capacity and 2.5 million aren't spoken for, roughly. Right? Now government is rushing to work out how they can possibly do this without rewriting the network code and having to change absolutely everything, and yet bring in all of a sudden CO2 from a world that Chris would recognize with 27 different counterparties.
I'm going to take a quick sidestep here, and it could lead us nicely into our Q&A, which will be coming up. I can see so many questions coming in, so we better allow a lot of time for those. But one of the thorny topics that we covered earlier, and I think it started as an audience question, is the topic surrounding the perception of biogas. So from your experience, do you think perception plays a part in the investment in projects?
Perception in what sense?
The negative, I guess, or dirty perception.
From the feedstock.
Yes.
Oh, he's gone there, Tom. You've gone there.
Eating him.
Yeah, no, it does, in the sense that there is still this idea that CO2 from waste anaerobic digestion plants can't go into food and beverage, whether it's because genuine concerns about quality or whether it's concerns about, you just don't want to be carbonating your drinks with something that's come from the back end of a cow, both of which I can understand. I think ultimately there is so much CO2 from energy crop digestion in the United Kingdom, it won't be a problem. And I think ultimately the big uses of carbon dioxide, whilst they will have incredibly restrictive quality specifications. So if you look at Northern Lights or NEP's quality specifications, they're almost tighter than for food.
They're tighter than food and beverage, yeah.
And they're paranoid about some things, including oxygen, understandably. But if you look at all those facilities, fundamentally they will take CO2 from any biogenic source, waste, manures, they won't care, just as long as it's quantity when it comes to needing it. And on Teesside, we now need it.
Okay, fantastic. Let's draw a line under that topic for the moment. As Tom said, we've got a range of questions coming in, many from David Hurren, familiar face in this parish, of course, of the CO2 Summit and the 1895 podcast. Tom, do you want to get us underway?
Yes, so this first question from David says, from UK, DEFRA hasn't had a CO2 resilience committee meeting since September. Is that overconfident, or is it complacency on what might happen this summer? Chris?
Phew. Pass.
Well, I mean, we're in a very different place to where we were in 2018, yeah? We're also in a different place to where we were in 2022. We have a lot of anaerobic digesters that have had CO2 capture connected, and more in the pipeline. Probably not that many more to come on before this summer. We certainly know that UK terminals have gone from export to import in the last 5-6 years, and how much capacity there is to bring more in, I don't know, you might know. But the big players have tooled up. Given that we've now lost our three, or looks like we're losing our three biggest sources of CO2, yes, it could get a bit dicey. We don't make fertilizer anymore, and we currently don't make ethanol. But the market has gotten a lot better at dealing with that volatility than I think it was 5 or 7 years ago.
I think it's the quietness too. It's been quiet. It's been calm. When they have to step in and do something, it's not pleasant. They don't want to. They only do it because they have to, and if they don't, they don't. And
I mean, it would be the first time that government had perfect information. So it may be complacency, David. But they have a better chance of having decent information now than they did 5 years ago, definitely.
That's a very good point. Well, David also notes that you both have experience of investment committees. Again, we're coming back to some bankability areas here. So given market volatility, how is it possible to paint a strong investment case for CO2 recovery from biogas?
Well, in our case, the answer is simply because it's part of the story, and it's still a relatively small part of the story. So we're currently, we built a plant that was built entirely on a biomethane business model that has CO2 capture attached. But, we had the ability to do that because of the biomethane model. We're now retrofitting it to some plants where it will reduce our power consumption and increase our ability to produce biomethane. So there are separate business cases, so you can be much more flexible about what you're expecting to get for your CO2. Between 70 and 150 or whatever is a perfectly decent range from an investment proposal point of view. Obviously, you want to maximize it out and get more than that. But from an investment point of view, if it's an add-on, if there are other benefits, that's how we make it work. We're now going to back to our sites where we have the opportunity to expand them significantly, and again, it will be a joint biomethane CO2 story, it won't be hinging on the CO2. If it were just hinging on the CO2, I imagine, Chris, it'd be more difficult, right? I mean,
Yeah. I mean, I have a more cynical view of this one, so I'll throw it out there. But what I saw, and there's David Hines out there somewhere. I think he started kind of selling the first CO2 plants out in the market with Pentair, and when they sold those plants, nobody had any idea what the economics were, but they got out there and people financed them, and that was a start. And thank you for that, David, for doing that. But I think we're going to do that. I think we're doing it again right now. I think the knowledge base of CO2 market of the investors out there is always what they've seen in the rearview mirror, right? What have they lived? Well, what have they lived? Well, I've lived this for 25 years. What they've really seen is a market that went up to 400, 600, 700 pounds per ton in the UK, right? And that's what they have in their mind, and they think it's going to stay there. There's a lot of people out here that have been in the market a long time, and we know that price can go the other way as well, and just as fast. And so I think what we're seeing right now, and I'm going to talk to you about the UK because I know it best. Europe's a little bit different things happening, but the UK is a great place to learn how it works. I think there's a ton of CO2 capacity going into the market, and they really don't know what the business case is. They've been fed a business case. The reality is it could come out a lot worse than what they think it could, because we're in a period right now, before we get e-fuels, before we have sequestration figured out, that we're going to swamp we're going to temporarily swamp the market for utilization, in my opinion. And so I think we're doing the same thing we did back 5-10 years ago. We're building those plants without a real knowledge of what's happening out in the marketplace, and that could damage the next round. What happens in the next round? So my view is a little bit more cynical in that the investors really don't know the CO2 market, and as a lot of you know out there, it's a really tricky market to get your arms around, and it's different depending on where you are. And so, I think we have real imperfect information there that's standing behind these investments.
And you see it in the fragmented nature of the market. The market is also driven by quite entrepreneurial, quite risk-taking parties at the moment who are going out and buying the equipment, perhaps on a misunderstanding of the market, perhaps on a more rose-tinted version of the market, or perhaps simply because they're willing to take that risk because they don't want to miss out, because they see big opportunities. But ultimately, in our market, of course, always with the underlying biomethane story.
Sure. And a final question from David. You may as well take a figurative chair on this stage for a moment. He says, majority of CO2 from AD, anaerobic digestion, goes to food and beverages. What sectoral risk is there that the understanding of HACCP and feedstock isn't well understood in many cases? Chris, I think we've talked about this before on stage, haven't we?
Yeah, what sectoral risk is there? Well, my biggest fear, and I've said this before, my biggest fear is that you've got, sorry, Philip, I don't mean this as an insult to biomethane. You got biomethane operators out there that don't understand that aspect of the business, and they're producing CO2 and stamping it with food grade. The reality is that the governmental regulations, the EU regulations, the UK regulations, the FDA regulations in the US don't tell you how to do it. They just say you have a responsibility to ensure that your food is safe and it won't harm individuals, right? It won't create any harm. And that's a very, very broad statement. That means you have to have HACCP experience, you have to have food safety experience, you need to have CO2 experience to really understand how to manage this whole aspect of your business. And so my fear is, as a supplier of CO2 from AD and biomethane, is that somebody's going to do something wrong or not do something they should do and create an issue and an event that will negatively affect my business. So, I have some heartburn there. In the end, it's not rocket science. You can do it. But, there's very little control of whether you do that right or not. And there's a lot of risk to the market if you do it wrong.
Love the heartburn analogy. Love the questions. Thank you, David.
Yes. Another audience question here, and to return to the topic of incentivization that we covered earlier. This question says that some producers, for example CHP plants in Scandinavia, don't invest into capturing biogenic CO2 because they say that there is no incentive. Do you think they're wrong?
Well, I wouldn't claim to be an expert from the Scandinavian market, and if it is indeed capture from CHP plants that is post-combustion, then obviously it's already more expensive than capturing off the back of a gas upgrader. But it comes back to Chris's point about European markets all being different, right? And there are some big pools of demand, and then there are some places that are awash in CO2. And it may just be, there are very limited incentives for CO2 capture. I mean, we may see that come round the corner now in the UK when they are looking to fill that 2+ million ton gap in Northern Endurance. We may see incentives for CO2 sequestration suddenly appear, right? That's what we're all expecting to see in a couple of weeks' time. But that's pretty much a first almost.
Yeah, I agree with that. I mean, the CHP producer capturing CO2 is a tricky, a very difficult economic proposition. If you look at Denmark, for instance, if you got, Denmark actually produces enough CO2 from biogas probably to cover their whole market, right?
Yeah, easily.
UK's getting there. It might take a while to get there, but the UK's, working fast to get there. We saw that from the numbers on the charts. So, no, if you got CHP, unless you're changing over to go grid injection, capturing CO2 doesn't make sense unless you're in a very, very specific market situation and there's not supply where you are, right? Mm-hmm. But in general, I'd say no, that's not a smart thing to do. They're doing the right thing.
Like you say, Philip, this would be a very different conversation depending on where we were and when we were having it.
Yep.
Yeah.
This next audience question asks, which CO2 volume do you need to meet so that liquefaction would be economically feasible?
Well, depends on how much you're getting paid. So, there is a bit of subsidy in the Danish market, so maybe there it's smaller, but then all the AD plants in Denmark tend to be enormous, so they're at the other end of the scale. I think in the UK, we're probably somewhere between 4,000 or 5,000 tons to make it worthwhile aggregating it. When we get a bigger and more organized pool of aggregation and logistics and so forth, then that may go down. The biggest thing that would move that is if you were able to create a certificated market where we could, instead of taking CO2 to sequestration from the southwest of the United Kingdom up to the northeast, we used it somewhere in the southwest and offset it with a similar amount of carbon dioxide in the northeast. When you start doing that, then all of a sudden you get to a point where you can collect 2,000 tons from an anaerobic digester and literally take it down the road to the nearest user in an optimized market. Different story. But at the moment, I think this is the problem that France is going to have. It's a big place. Yeah. They have small plants. You're going to have to haul it a long way, and trucks kill anything. The economics on anything.
Yeah, and there's also, this economy of scale thing, whether you're 100,000, 200,000 tons a year or 6,000, 7,000, which is what we see as that boundary. You still have to have the analytical equipment if you want to go into the food and beverage, even if, like Philip said, the sequestration market could be even more difficult analytically than the food and beverage market. So, it doesn't matter. That investment is the same. You have to have it, and that's a gigantic investment in the whole scheme of things. So, the fixed costs that you have to operate a plant, to me, bring, from what I've seen, tends to bring you into this towards the 7,000 tons a year number and more.
Okay, yeah.
Well, we've had so many questions today around subsidies, incentives. They're continuing here. We've got another one on screen here. How much do you need to be paid for CDR such that it is economically feasible to
store the CO2? Yeah. Well, that depends entirely on what the transportation storage fee of your local friendly sequestration facility is. Is it £100 a ton or is it £300 a ton? Because the economics of liquefying CO2 are directly correlated to the price of electricity in wherever you are, and that's not a huge amount. That's 30, 40, 50 quid a ton or something in the UK, I think, probably per ton in terms of electrics, and then you need to pay for the equipment, and obviously there are, as Chris said, considerable economies of scale to be had, and the operations and everything else, and then you've got to haul it, which will add depending on where you are, somewhere between 20 and 60 pound a ton as well, depending on how far away you are from this facility. Start adding all of those up, and then add on top 100, 150, 200, 250 TNS fee, and your CDR soon becomes 300-400 pounds, right? And it's, in what might happen in the UK, very much might, is that you get the TNS fee paid for and then sell the CDR, because the taxpayer in the UK has already signed up for the TNS fee. We've as taxpayers, we've bought and paid for it. Well done us. Now we just need to fill it.
Fantastic, thank you. And Pedro would like to know, is the sequestration to obtain CDR credits the most promising monetization path for CO2 from biomethane plants? Is there any alternative?
Yes, there are alternatives. So the biggest one potentially is the SAF alternative, but that is even further off than the sequestration facilities, because the mandate doesn't really kick in until 2030, and the soles of people's feet aren't burning yet, and it's not entirely clear where all this stuff's going to come from. But that's probably a big market. Then in the interim, there is concrete and cement production and so forth. The sort of locking up the CO2 quickly in solid aggregates, that's coming on in the UK. But again, the tonnages are small. Beyond that, what am I missing?
No, I think that's really the main two, and there's a couple things here, a couple uncertainties here. One is who's going to own that? Who's going to get that CDR, right? If you look at concrete, right, and CarbonCure is an example, right? CarbonCure actually has the technology that allows you to sequester permanently CO2 into concrete, right? So they kind of control that chain. So where does it go? If it goes back to the person that's producing the CO2 or selling the CO2, all of those things have to come clear, and then it's going to be negotiated throughout that supply chain. Oh, how much of that value do I get? How much do you get? If CarbonCure is actually determining where the CO2 goes, then they're going to have a big say in how much of that value do they get. So along the supply chain, there's going to be a lot of fights of who's getting that value, who's actually going to recover that value. The other thing, the elephant in the room that I didn't hear us talk about this morning on e-fuels is scale. Right? We're talking about, we produce a ton an hour. Well, a SAF plant at commercial scale will use 80 times that, right? 80 times that. So, depending. So how do we balance that scale of serving that market with the digester-based CO2 when it's going to take, if you really really get to commercial scale and you put it together, you're going to have, 20 digester plants out there somewhere within distance, and who wants that truck traffic?
Right? The biggest green methanol project we were talking to was looking for 450,000 tons of CO2.
Yeah. So how do you move that via truck, right? So, those are the uncertainties around the e-fuels market, and the reason we talk really exuberantly about what that's going to mean to the CO2 market. When I wake up and I'm tired and pessimistic, I think it's never going to happen. Because it's going to have to go over the fence from a power plant, from a Drax that's doing using biomass to make power or something like that. Because just managing that supply chain alone is a gigantic risk and a gigantic chore. So we've got so many things that we've got to figure out. That question's a great question, but the answer is, I have no idea. Ask me in 10 years, and hopefully I'll be retired.
We'll bring you back to you in 10 years'
time, Chris. A few more audience questions here. Let's try and get through these before we have to wrap up. Biogas upgrading is an obvious candidate for biogenic CO2 capture. Do you see other sectors that are good candidates for this too?
I mean, anybody who is currently brewing or distilling with the right market incentives, if they're not already doing it to carbonate their own beer, and obviously not their own scotch, then those sources are very, very obvious. Most of them are geographically remote. Well, certainly the distilling ones are geographically remote, which brings with it the transport issue, etc. In terms of combustion, well, I mean, I'm speaking for the UK at the moment. We're currently losing combustion assets rather than gaining them because tariffs are falling away. Subsidies that were handed out 19 years ago are coming to an end. And we see now that some of those thermal plants probably will shut down. Drax got an extension for 4 years at half rate, ostensibly to bridge the gap to when they could do CCS. But they will, it's post-combustion CCS, which means that they will need a lot of money and a lot of support in order to do that, I think. There's no easy fix for that. And then they still need a sequestration facility, and you can't rail car Drax, and you definitely can't road transport Drax, so you need a pipeline. Or if you need a pipeline, then you need Saltend, Dillington, or Theddelthorpe to come off. You need a close-by East Coast sequestration facility. One of them may, but it all needs to fall into place. And for other burners across the country, the problem is exacerbated because they're even further away from sequestration facilities.
I mean, there's a lot going on in gas. There's special projects going on around pyrolysis and gasification and that technology. But they just don't seem to ever be able to get the consistency and the economics that they need. Yeah. So, we've been doing it forever, right? Gasification is one of the oldest technologies around. We can't seem to make it work with the feedstocks that they have available to them. And so that's probably one of the potentials out there. But they got a long way to go before it becomes anything significant enough, in my opinion. Yeah.
Our penultimate question here. How can we integrate negative emissions into the EU ETS? You've had a lot of tough questions here this evening.
Yeah, exactly. This is one for you, but not for me, and even not for you.
Can we pass on this one?
Yeah, I think we might have to pass on this one. I don't understand enough about... In the UK, we're talking about integrating biomethane into the UK ETS, and we're talking about integrating greenhouse gas removals. We have a minister who was, until recently, a retired MP and wrote the report on greenhouse gas removals, who's now become a government minister, who is now going to react to his own report. So I do think in the UK we will see greenhouse gas removals becoming an offset for the ETS, the UK ETS. But at the moment, we don't even have biomethane integrated into the UK ETS, so we are actually behind. We may overtake, but we're certainly behind at the moment. But yeah, I mean, it's a sensible thing to do, right? But the ETS market is another one of those things where have you looked at prices recently? You only needed one German chancellor to make some negative remarks, and everything falls off a cliff.
Well, we've saved our final question for a reason. It does bring us nicely towards the conclusion of this podcast episode. No less contentious, of course, but perhaps a little easier to answer. So someone has asked, look, we've touched lightly on the situation in the Middle East today. We covered that in our opening sessions about the potential impact on ammonia markets, fertilizer markets, energy, and ultimately CO2. From your experience, what should we prepare for, and do you have any recommendations for the UK? I'm thinking we're coming to you here, Chris, really.
Yeah, this one's a little interesting because when it first all started, I thought, okay, here we go again. Gas prices are going sky high. All of the LNG is stuck in the Strait of Hormuz, and it can't get through. So we're going to have high gas prices. Ammonia will start shutting down, and we'll go through this again, what we did in 2021, 22. But then all of a sudden, the realization came that, the ammonia is also stuck at the Strait of Hormuz, and there's a lot of ammonia that goes through there as well. That means the price of ammonia is going up as well. So short term, as long as the price of ammonia stays high and power because of shortage of supply, because there's so much supply out of the Middle East that can't get to market, then the producers of ammonia in Europe can handle the high gas price because it'll be offset. It's when that balance changes that we need to worry. So if for some reason the ammonia market prices don't stay high, they realize that they still have enough supply from other regions, and it doesn't stay high, but energy prices do stay high. That's when we have a problem. So my feeling is Right now, I don't see a scenario, as long as those two move together, where we're going to see 21, 22 over again. But that can change quickly.
Yeah, I mean, it's interesting because lots of stuff passes through the straits that we don't think about that will impact the market for a long time to come, whether that's helium or sulfur or aluminium or all sorts of other products that come out of the Gulf. And which will have price-driving impacts in the medium to longer term. Losing 20% of the world's crude is obviously a huge issue. Who knows how long it's going to go on for. The crude will come on relatively quickly again. What won't come on nearly as quickly is the LNG. And I think, therefore, in the gas markets, you'll probably see more pain for longer. And the longer this goes on, the longer that pain will take. And that will filter through to the fertilizer markets. I think what you have seen as a result of the Ukraine crisis is a world realizing that it can save energy if it needs to save energy, and it's perhaps gone back to using more energy and using more fertilizer because prices have normalized again. But the pain we went through last time, what we haven't seen in the agricultural markets in particular is we haven't seen a massive drop-off in agricultural supply, because the one thing that doesn't travel through the straits outbound is wheat or anything else, right? So we have much more stability in those markets, and I think in those markets the biggest subject is going to be nitrogen use efficiency, which you now hear more of than you ever heard 5 or 10 years ago, in terms of, do we actually need to throw this much on? Is this worth doing? And that will temper prices, and I think the same will go for energy use, because the famous story of on a continental European airport, you can't wash your hands in anything other than cold water. You go to Heathrow and you scald your fingers because they don't seem to care about energy prices.
That's all the audience questions ticked off. So let's just take one quick look at this live poll that we've got going. For those in the room, we can see it on screen here, but for the benefit of the tape, we've been running this poll today at our event, asking how confident are you in the stability and reliability of CO2 supply chains in Europe over the next 3 to 5 years. Overwhelmingly, 51% have said that they are somewhat concerned with there being midterm risks remaining. 18% say they are somewhat confident. 13% are very confident. 11% neutral, and 7% concerned with a high risk of disruption. And Rob, this is similar to a question we've been running on the gasworld website over recent weeks and months?
Yeah, this is the exact same question as part of gasworld's confidence tracking or sentiment tracking. Interesting to see how this has changed. In February, we had we had a 10% share of our audience that said they were somewhat confident. But we had seen that confidence tapering. 13% were confident in February 2026. Somewhat concerned rose from 14% in October to 24% in February, and then you can see there, somewhat concerned, 51% in the room, perhaps because that's a more distilled audience at this event, as we'd expect. But perhaps we should put it to you guys for your thoughts. Chris?
Did you say
is that expected?
7% are concerned?
7% are concerned that
so
there's
you've
a
got
high
close
risk.
to 60% who are nervous as hell.
Yeah.
Go on, Chris.
Yeah.
What do you feel
like?
How do you feel today?
I was in the 51%, but again, it's all about understanding that it's not one market in Europe, that it's a bunch of different areas. And I think, and I said this last year, I'll say it again, we're going to continue to have regional issues. It's going to pop up in different regions at different times. I think I'm a little bit better, I'm certainly better than I was 3 years ago in confidence, but it's still, we haven't fixed the thing. We can have bioethanol issues coming up depending on what happens in the future around bioethanol and incentives and blending and economics. Ammonia remains ammonia, and it will always be that way, and we all know well from these conferences, we've learned about how that works a little bit. So, I think we're still going to have some issues going forward. I don't think it's as fragile as it was 4 years ago. And biogenic CO2 is playing a role there. It's playing a role. And but I think it's going to be a while before we get to the point where I would ever say, go switch over to the somewhat confidence. We still got some years to go, I think.
Yeah, look, I've only come to this market, as I say, very, very, very recently, and we've had, 2 supply crunches in the UK since 2018. I can't see that stopping. I mean, yes, we've had a lull, we've had a period of calm, but on the horizon are some really big elephants in terms of supply and demand, and that may mean that for a couple of more years it's happy going, but that you go back to a market which for 20 years is pretty much boring, I cannot see, not in an energy transition. Yeah. Not with all the other things we need to do between now and 2050. Yeah,
and we're still seeing some things like, this shift to sequestration that, we heard today from Nippon that, nope, Sluiskil will remain a source. If that happens and that's the way it goes, then there's some stability there. But we have seen the Shell source in Rotterdam has decided to go sequestration, so that's come off the market. So those risks still exist in the background, right? So as sequestration develops, as e-fuels develops, those are I think the risks that you're talking about, that we'll see quick swings of big volumes of product that could still impact, and we don't have a backup for that yet, but we're working on it. We're building it slowly.
Well, as you know, we could talk about this for hours. I mean, we have for an hour already. So I'm conscious, Tom, we're going to get kicked off this stage soon. Maybe we should turn to some concluding thoughts.
Yeah, and let's try and keep this short-ish. If you both had 3 things to maybe watch out for going forward as we take a look towards the future, what would those be? Chris, I can see you thinking, so Philip, I'm going to come to you first.
Oh, that was my thinking phase. 3 things that 3 things that I think
to look out for in the future going forward. Yeah.
Well, from a UK market, it's definitely what happens when sequestration comes on in big fashion, because it is perfectly possible that we are less than 3 years away from a serious quantity of CO2 sequestration being, 1, available, and 2, sucking up with government money CO2 out of the market. And what happens there in the next year or 2 will be telling for anywhere else in Europe that's planning sequestration facilities. I think they will also develop more into being flexible. I love the fact that Porthos won't take road delivery now or any time between now and 2035. But I think that's the biggest thing. I think that on the supply side, I think anaerobic digestion plants will continue to be built at scale, and more so. The European Union has a very ambitious target, which we're going to struggle to hit, but the demand for biomethane certainly remains, and with that, in most jurisdictions will come an increase in scale, which will bring more CO2 into play that is transportable and usable. And those are my 2 big points, I think. And then the SAF point. Are we gonna push for that? If we want to hit the SAF targets that we've set ourselves for 2030, we need to start building the production facilities for that SAF next year. Right? These aren't anaerobic digesters you can build in 12, 18 months. These are huge petrochemical plants, and we need to build them somewhere. And they will then, when they start up, they will swing huge amounts of volume.
Chris?
Yeah, so I'll kind of tag on that a little bit. I agree with that. I agree with all the points, but the first one is that there's a potential that the market's going to get shocked by big volumes moving to sequestration, as we talked about. I think the other one I'd add in there is on the way there, too, I think we're going to have some oversupplies in the market. So if you are a user of CO2, it's going to be a good thing. If you're a seller of CO2 like we are, it's going to be painful because CO2 remains a commodity and it will swing very quickly up and down both ways. So I think that's the second thing. So we're going to have big shocks if we turn over to eSAF or e-fuels, or if we turn over to sequestration. And in the meantime, while we build capacity in the biogenic market and specifically in the AD market, we better be careful. You better be prepared that some of that might just sit there. Some of those plants might get shut down because they don't have a place to go, and the CO2 market, or they won't want to go at the price that the market's willing to pay. And then I think the third one I'll throw in there just to kind of tag on to some of the things that have been said and I haven't been able to comment on is I actually think that we will get through this waste. Some of the perceptions around waste and anaerobic digestion and the use of CO2 that comes from that process. I think we're going to get through that. It's going to take a little bit of time, but we're working on stuff there in multiple countries, and I know that there's a lot of other people out in this audience that are working on that as well. And the expectation, I think, overall from the people that are really close to it is that it's just a matter of time before that perception is in the back, kind of in the rearview mirror.
Great, thanks to both of you for that. And just to get your very final thoughts of this episode, this recording, and the final thoughts of the day, in fact. Philipp, this is your first time here with gasworld and first time on stage with us. So if you had a message to those, not only those in the room here today watching, but those who might be listening to this as well, what would be your message to them?
I think I come back to the point I made earlier about the way that we're really going to grow a market here and pull as much biogenic CO2 out of the market and make the best use of it is by creating a certification system like we have it in electricity and gas, so that it effectively becomes a fungible and one molecule of CO2 is like another molecule of CO2. That will allow Chris to stop hauling CO2 long distances and open up very interesting opportunities for us to sequester CO2 that's actually too far away from a sequestration facility or a SAF facility. And that, I think, is something the European Union needs to do, or in the UK, the government, to create that. But then you see that happening in, we have that in electricity, you see that happening in gas. I have to think that's going to happen in CO2.
Sure, and Chris, to get your final thoughts, you've been to a number of these events over the years, you've seen this industry change, so what would be your final message?
Yeah, I guess my message would be one of caution of betting on the e-fuels market for CO2. Mine is to say, let's be really realistic, let's look at this critically, let's not just look at it as a savior and think that it's going to save the CO2 market from a demand standpoint. I think there's major issues, and I talk on a regular basis with up-and-coming e-fuels companies that are wanting to talk to me about sourcing CO2, and they know very, very, very little about our industry, which in general, I'm generalizing, so sorry for that. They know very, very little about how our industry works right now. And so we need to be aware of that, and even in their pricing. If you look at the numbers that they have in their models for their assumptions of what it's going to cost to get biogenic CO2 for their process, I have no idea where it's going to come from. So I think we need to really be aware of that and critical, and we need to talk about it to the e-fuels producers to tell them how it works now, because it's going to force us all to find other ways to service that, right? Think about other ways than the traditional way that we've moved CO2 around and serviced utilization customers. So my final thoughts and comments are, let's be real critical and be aware of the fact that the people out there that are working on e-fuels don't know how our industry works right now, and we need to try to bring that up and talk about it and find a way that does work, because the way that we're kind of thinking or not thinking about it ain't going to work, in my opinion.
Great, thanks, Philipp. Thanks, Chris. And Rob, I think that's very much a wrap for this episode.
That's an absolute treasure trove of insights, Tom, isn't it? Overloaded with them, almost as many as the terminologies and equations we have to try and get our head around in these Q&A sessions. I think we do have to clear the stage, don't we? So for all of our listeners, you've been listening to Chris Carson of Carbonic Solutions and Philipp Lukas of Future Biogas. Let's give them a round of applause.